Steve Kellogg joins us this morning. Talk about the quarter, Steve. The street definitely knew what you were up against coming into the print. I'm not sure they counted on you pulling it out like this.
Well, thanks, Carl. It's great to be with you. I am really pleased with the way the team came through in the fourth quarter. You mentioned the ongoing labor strike. The labor strike is actually over. We got through that at the end of December, but it did last the entirety of the fourth quarter. We're delighted to have our people back. And they're back in full production, trying to ramp up and recover inventory. But it really was a terrific performance. The rest of the portfolio really stepped up and delivered. Our snacking business, our international businesses, our frozen businesses all performed very well to make up for what was a very, very challenging cereal quarter.
Yeah, before we get into price and mix, what is the situation on cereal right now? You talk about momentum in snacks and momentum in emerging markets, but what about core cereal?
Well, core cereal was affected in the fourth quarter because of the quarter-long labor strike, to be sure. And for 2022, what we're really looking at is the first half of the year, a recovery of our inventory, a recovery of our distribution, a restoration of our commercial plans, which will lead to a back half of the year that sees growing momentum in our cereal business and a real return to normal. But it was an unfortunate circumstance, a challenging one for us. But as I said, the rest of the portfolio stepped up, more than made up for it. And, and when we get to the second half of next year, you're going to see the type of performance that we know our cereal business and our great brands are, absolutely capable of.
Steve, talk a little bit about how you're absorbing the cost increases, what your trajectory looks like in terms of potential price increases for this year and beyond.
Yeah, so if you look at our performance last year, you saw a very, very strong performance on price mix, mostly driven by price, and that was really accentuated in the fourth quarter. So as we enter 2022, we are still seeing double-digit cost inflation. Obviously, from across packaging, ingredients, labor, freight, you name it, it's pervasive and it's everywhere. We're going to see the wraparound benefits of the pricing that we took in 2021 into 2022, and we'll always evaluate the environment to see if there's more that we need to do. But our goal is to cover all of those input costs with pricing and productivity, and we think we're in very good shape to do that. Our brands have responded incredibly well. Price elasticities have been at historical lows, so it's been very inelastic. But we're cautious as we look forward. We always keep the consumer at the heart and soul of everything that we do. We don't want prices to get too high, but we're in an environment where it's broad-based, it's across everything, but we've been able to cover it. Our pricing performance has been very solid.
And Steve, I'm wondering how you're thinking about potential M&A in this environment right here, filling out the brand portfolio, perhaps, and just thinking about, some kind of very narrowly based food-related IPOs of last year that really didn't do that well. These sort of companies without scale, but maybe with a brand in the plant-based area, and wonder if any of that's on your radar.
Yeah, when we look at our capital allocation, we're very pleased about the way we exited the year with very strong cash flow and a delevered balance sheet. And so our leverage is lower than it's been in several years. And so we've got dry powder to think about additions to the portfolio if they add share owner value. And when you look at our portfolio and what's really doing well, it's snacks, it's wellness, it's emerging markets. If we see opportunities to add to our portfolio, we'll, of course, look at it. But we're very disciplined when it comes to price. And we'll, of course, always be on the lookout for opportunities that would add value to our portfolio.